Good afternoon, everybody. And just coming to the end of what's been a quite an unbelievable week, and a week of incredible volatility around world markets. But what I wanted to do is just give you a quick, really a quick 5 to 6 minute update on what's going on around the world, the way that we're sort of seeing things, trying to keep you informed, trying to keep that pushing information out. That's exactly what we've been working on right from the beginning of this crisis. So what we have seen this week has been the beginnings of what looks like another sort of attempt at recovery by markets, but we're sort of signalling that that might be a little bit premature. Anyway, I'll just do my usual sort of share screen with you here and run through the things that we need to look at. So I'll quickly do that for you, which takes us there, I hope. Yeah, okay. So again, just quick update on markets. Looking at the Australian share market first, if we can. What we've seen is the market fall is in the order of around about 30%, which is really, really significant as far as historical market performance is concerned. We've seen a series of what we defined earlier in one of our back to basics videos as being dead cat bounces. And we've seen them as the market has fallen. There've been sort of little glimmers of recovery and then another fall and then a glimmer of recovery and another fall. This last little kick up here, it does have the similarities of the previous ones and looks like to be another little dead cat bounce. So obviously the market falling from 7,000 points to 5,000 points, tempting recovery here, maybe going to struggle to get much further past that 5,000 point mark. And looking at this afternoon's markets, they've come back off again. Listed property, which is the Australian share market's view of property, particularly in relation to Australian property trusts, that also has really had a serious decline and probably even less dead cat bouncing than absolute just hitting the bottom. That market, again, probably trying to recover now, but will struggle. Across global markets, what we've seen is that the world index, which is a combination of all shares, which is shown here, is down sort of around about 22.5% since the start of this crisis. The Australian market is actually the worst performing market of the ones that we're looking at today. Europe, emerging markets, Canada, the UK, Japan, and the US are sort of all down in that kind of middle 20s range, whereas we've sort of ticked past 30 and rebounded back from that. One of our biggest concerns moving forward over the next couple of weeks is a thing I'm going to call the US time bomb. The US has now recorded more cases of COVID-19 than any other country with 82,400. That surpassed Italy's 80-odd thousand just last night. Now, most of that outbreak has been amongst the young people of New York, where New York has typically a younger sort of age profile. But now we can sort of see that this is starting to spread all over the US. The New York City is the epicenter of this. Starting to see outbreaks right around the whole country. And there's absolutely no reason with a pandemic that's not being controlled that the New York experience won't be similarly experienced right across the major centers, particularly sort of up here in Washington State, across here in California, and then probably most problematically down here into Florida, which is obviously where a lot of elderly Americans live. And we've also seen a fairly significant outbreak here in New Orleans, Chicago. So we're sort of predicting that this probably it's a large population. They've had uncontrolled travel. We would expect that that's going to really be the time bomb that's going to cause most of the damage. And if we look at the coronavirus outbreaks as at up to last night, I beg your pardon, you can see here in the early days, China in the red had the most incidences of the disease, possibly less reported than what we would expect. But and then from there on, as we've spread, the green obviously being this really mentioned in Europe, the largest growth coming out of the USA. So we're expecting that the next 2 weeks is going to see really significant outbreaks across the US, a lot of social dislocation, a lot of overcrowding of emergency hospitalisation, that sort of thing. when we look at that and we take that as compared to what this virus has done to the US economy, what we're starting to see is, well, what we have seen is this massive spike in unemployment claims. A spike like the US has never ever seen before. This graph really knocked me out because I couldn't quite get my head around how significant this is. That when we've looked back at previous recessions, which have been these points in the grey, which were the oil crisis in the 1970s, 75 oil crisis in here, the downturns of the 80s, the 90s, and then through to the global financial crisis here and sort of leading up into 2008, the tech crisis here in 2000. None of those have had unemployment spikes like we're seeing now. And that is also sort of further ammunition to the time bomb. And it's a much deeper kind of looking recession in the US than we've ever seen before. So look, after the time bomb, we expect that this little rally that we've had is going to end, and we're going to see further weaknesses across markets, both in Australia and the US. This presents an opportunity for your investment managers to actually step into these markets and to take advantage of these weaknesses. The next few weeks really are going to be the difference out of this whole crisis as to how well we come out of it. If we're able to switch portfolios from their targeted fixed interest components into these really sharply declining US and Australian share markets, when the rebound comes back through again, we're going to be in such a better position. It's going to be quite amazing, and the depth of all this is quite amazing. So let's put our faith in the fact that again, we've seen these things before. We know what we're doing in this space, but we kind of got valuations in mind as to where we get to the low points. You're never ever going to find an accurate low point. That's just not possible. But they're starting to appear from these markets. We're starting to get some emerging value. We're going to watch with interest next week. I'm going to keep you up to date with the data as far as coronavirus infection in the US. And from there, you'll start to get communication from portfolio managers about activity on portfolios. Please feel free to pass this information on to anybody that you feel it might be useful for. Please stay healthy. Please look after yourself and observe all the government regulations. In Australia, we're managing to slow this thing to a level that looks like it could be containable, as opposed to the US, where they're just not going to contain it. It's going to be like Italy and Spain. So let's keep doing the right thing, folks. Look forward to talking to you next week. Have a weekend, but sometimes the weekends look like the weeks at the moment. But irrespective of that, try and enjoy yourself. Talk to you soon. Bye-bye, and thanks for listening.